The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this third day of August. My pleasure to be here. Dow's up 63. It's very interesting because the Dow is up 63 at 25,390. This trend line you can see in the left side chart, the daily chart, we went short the day after the confirmation of the D peak. So the high was 25,587, just as we did on the 13th of June when the 12th made the leg D, high 25,402. The difference is that there was three bars that were red. We had 3 bars here, but the 4th bar was a gap down. We had a red candle with a lower low. Yesterday was the big test, and yesterday it went below the 14-period moving average and then bounced back. But the MACD is slowly deteriorating in terms of strength. Still good, but that 9-period differential is starting to come closer and closer to the red line, the slow-moving average. And the stochastic hasn't shown any strength. It's at 66%. I tried to get to see which Dow stocks are actually working right now, but I wasn't able to get that. I don't want to waste time. Just want to say that in the chart wave methodology, there's a pattern that we call the falling axe formation. And that is with a lower series of highs and much lower lows, it creates a falling cone formation, an expanding falling cone formation. If that resistance line, in this case at 25,420, the exact high of the day so far, if that gets pierced, then there's a real good chance that the next peak will be the peak to look at. I would go for each candle, and in fact, we would make 25,488 the next resistance. At this particular point, the rotation that we saw yesterday where the Dow was still weak all morning, while the NASDAQ, after being beaten down since last week, last Friday, came back extremely well. The Dow kind of was dragged up. Now it's having a little bit of a follow through to the upside, while the Russell 2000 we'll see is quite weak, and the Qs are already kind of struggling here after a huge day yesterday. So let's just go through that, and I'll make it very clear. If the Dow was to close today in the 25,440s or higher, I'd have to look at this and say, you know what? Even though it's a peak D in the weekly chart, the bias has to be now that there's going to be rotational strength. I was asked, what is this with the rotational strength? There's always a rotation going on. I know there's always a rotation going on. But if yesterday Apple, after whopping gains overnight, gave back even 30 to 40% of those intraday gains, that would have impacted the NDX really. It would have pushed any rally attempts down and aborted them, and there would have been a reversal to the downside, which is kind of what I was expecting to a certain extent, that there should be a pop-up. I'll go through that as technical Friday. I'll go through those technicals in a moment if I get a chance. But most importantly, it is absolutely imperative to be monitoring the rotation, because if there is a pullback that involves almost all the sectors and the best of the best in each sector, there's no way. Then there's no rotation. Then it is just a solid down move that sees triple-digit down, a real bearish phase, triple-digit down moves in the Dow, strong double-digit, minus 15 to minus 22 moves to the downside in the S&P, and the Qs likewise, and the IWM, the Russell 2000, same thing. And that's where you get that acceleration to the down, just as we did back after the January 26 highs that were made in the Dow and the S&P and a number of other indices. All right, so I'm just trying to make that as clear as I can. In the meantime, the way that I'm looking at the rotation right now says that the Dow needs to break into the 25,290, 25,270s by Tuesday of next week for this downtrend to continue. If it just goes sideways, I might have to just give up any chance of a pullback here and think, oh, okay, a little bit higher so we can retest the highs that were made just last week. That's the way I'm looking at it. All right, let's go on. So you've got the S&P much weaker today than the Dow. Dow's up 0.26%. The S&P is only up 0.14 at up $4 at 28.31. And you can see that the MACD is very weak. The stochastic is very weak at 52%. And although there's been a price move to the upside, if there is a pullback under it's at 28.31, if there's a pullback under 28.22, 28.19, that's saying, uh-oh, starting the move down with lower highs and lower lows. I'm wrong. If there's a push in by Tuesday into the 28.42 area, 28.48.03 was the recent high, all-time highs in the 28.72s. All right, weekly chart still leg D unless it goes above 28.48.03 today. I don't think it's going to do that. And monthly chart is still very strong. Now let's go to the QQQs. 1, 2, 3. 179.44 down 9 cents after a spectacular day yesterday. There were two spectacular down days back going into Mondays, Tuesday, Wednesday, third. Yeah, Monday's low and reversal to the upside, hitting the 50 period moving average. MACD's weak, stochastic weak. Weekly chart is in leg D, probably a peak D today, up in that resistant Chapman wave inside track repellent zone. MACD is good, not great, but good. Nothing like it was back when it made the high on the 17th of March that week at 175.21, peak F with a sharp pullback. Stochastic's very good at 90% in the weekly chart, and that is a comfort. And the monthly chart, we just got 3 days into August, and here we are, no, 2 days into August trading. I'm talking about 3 days of August, and we're looking at the August candle nicely within the July candle. So far, the Qs, that's good action in the monthly chart, good action in the weekly. The daily is suspect. IWM is coming up right now. IWM is down $1.10 at 165.79. Just look at the R. Look, first of all, he has the E-mini 5-minute chart here, making an arch, and then a cup formation, and then a cup formation, and another arch, and the 10-minute chart, same thing, stuck in a range right now. But look at the IWM right now. This is the 5-minute chart. 167s down to the 165s, just on the very short term. The 5-minute chart, look at that, right there, 167 as well, down to the 165s. Not such a big deal. It's only 2 points or so, but wow, look at the pattern. Not very good at this particular time. So let's go back to IWM. This is the weaker of the indices, making an arch, trying for the second arch formation, watching it closely at 165.88, down $1.11, 1.66%. If at any point next week it takes out 165 to 164 support, closes under 164, we're looking at this coming down quite sharply after that. I'll go to gold as we're about to go to our first break. Gold is up 6 at 12.26. A nice candle. We've seen these candles before. The only difference is that I'll go to the dollar in a moment and show you what could happen. But I still think trading range. I'll be right back. Basil Chapman, Tiger Conditions out. Dow's up 73. S&P's up 5.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so the IWM that we're looking at, see, so one of the dentists has got a leg D. I only have a peak D. I've got a peak C, but it's the arch formation that we're really looking at. Technical Friday, let me just explain this. This is like an inverted, when I'm talking about a falling X formation, this is like an inverted one. Oh, he has a pre-market. Yeah, I don't do pre-market at all. I do only at the open and at the close. So that's the reason why. But even then, what it's really got is the arch formation, and it says, be careful. This could be a 1-to-1 to the downside if the IWM at 165.97 breaks 165. It could be a quick run to the test the 164 low that was made just on the 31st. Okay, so now let's go on. What we're looking at here is I'd shown you gold, and what I was saying is that gold, nice rally today. We've seen this candle before. It really needs to go into the 1242 area. It's at 1226. Once it goes to 1242, it's saying, hey, I've begun in the weekly chart an attempt finally to try to get some kind of an up candle and a V-shaped bottom of significance, but I don't think that's going to happen just yet. I'll tell you why. Look at the silver. Silver SI right now is trading at up 0.14 at 1553. A little bit better candle because it didn't make lows. It didn't take out that left side low of around about the 20th of July, and it's holding quite nicely. This is an inside candle again, second one in the weekly, and that's suggesting that silver's getting ready to at least attempt a rally, which says that gold might follow. I don't want to overstate it. Why? Because if you look at the dollar, look, the dollar is in a high-level consolidation. The weekly chart is still very good. The daily chart down 14 cents at 95.02. It keeps rallying above the 9 and the 14-period exponential moving averages. It's closed a lot above it. It's kind of treated them as a sine wave going up and down and up and down above it. The MACD has just crossed positive for the first time in quite a while. And that's important, but the stochastic still at 41%. So either there's going to be a failure pattern at 94.76, the 9-period moving average, the green one there, will be tested by Tuesday, or this is going to try to rally a little higher and get to the 95.43 level to start a leg B sometime early next week. So I'm looking at this and I'm saying, gee, that weekly chart hasn't broken down. The technicals are still strong. I don't see gold going anywhere right now. Maybe it's just trying to find some support. Let's look at high-grade copper. High-grade copper right now is trading at, whoops, invalid symbol. High-grade copper is trading up 0.02. Yeah, stuck in that H pattern. Also, a little bit better weekly chart than, say, the gold. It's a little bit like the silver chart, holding the 200-period moving average right on it in the monthly chart. To me, the high-grade copper is still struggling. Let's put it that way. Let's go to the TLT. We're looking at the TLT right now, which is at 119.06. This is very good action, which suggests that the market should be pulling back quite sharply. It's not. The Dow's up 85, S&P's up 6.5. But you've got a nice strong leg A. We've had this before, but the way it came about with the MACD just a start of an improvement, and the stochastic at 12% after being in single digits, it's just a start of something. But I believe very strongly that the yields are stuck in a range, just as the TLT, the iShares 20-year Treasury bond ETF, is stuck in a range. That's the way I'm looking at it. 119.75 resistance, 118 to 117.60 should be very strong support. Show expanded daily. Here's the daily. Let me show you. Yeah, the reason why I hadn't shown you the daily is because I was looking at the weekly, and the weekly shows you this series of H patterns that goes to an arch. Here we go. See the arch? Then it goes to a cup formation. Now it's back to the arch formation. Just constantly swinging. Now, is this one a shorter, an abbreviated one? And now we're going to go higher? That's the question. And I would just posture this thought that yields are kind of stuck. If you look at the TNX, let me show you something here. Keep an eye on this. You see the H goes to a lowercase m pattern. Have a look at this. $TNX.X. Look at this. That's the opposite. You've got the cup formation, and it keeps alternating. And in fact, a much, much bigger pattern. Look at that. From there to there, to that doji candle, goes there to there, while simultaneously you've got that and that. So I'm just looking at the rotation, sine wave rotation between the cups and the arches and the cups and the arches. And that's just saying to me, yields are stuck in a range, and the 10-year is between 2.96 right now. And I think it's stuck between what would that be? I'd say 3.10, 3.01. This is for next week. And 2.93, somewhere around there. I think it's just kind of stuck. What's your thoughts on initiating position in NSU? NSU is, what is NSU? NSU is Nevsun Resources. Whoa, this is a nice looking chart. So let me see. I'm going to put an up arrow because the stochastic in the monthly is already at 80%. So this is in leg A, leg B, powerful leg C, trading at 3. Oh, I just noticed, trading at 3.67. Oh, what a low price stop. Goes from the 2 area up to 3.67, goes to 3.70s, I think. Now it's at 3.67. Let me just see the weekly chart. Here we go. Wait, is that the low? Got to choose the exactly. Yeah, that's the low. 1.96, 1.98, 1.98 again. 2. Okay, good. So this is the low. And in the weekly chart, we've got peak A, peak B, peak C, peak D, and peak E. And now it's consolidating. What I would have done is I would have immediately drawn that rectangle. Now, that's what I always do. I would have said in a shorter time frame, this can go to a peak A, peak B, peak C, as long as it can rally to the 345 area, which it did. So now it's at 367 in a gray leg A, gray leg B, gray leg C right now. And the rule of thumb in the rectangle formation is that the price in a shorter time frame can go, if it holds the low, starts to move towards a third of the distance between the top and the bottom. there's a good chance it's going to form a Chapman wave peak A, peak B, peak C, a buying mode within the sell signal that goes to almost the left side high, right on the left side high, or just above it before it comes back and retraces. So the fact that it made a high of 3.82, is it? 3.86 the week of the 11th of May says that I can go to the daily chart. You know what I'm going to recommend? This is purely speculative, and this is only for the person that asked me the question. A, B, C, D, A, B, C1, /D, G/C1. I like this. I think as a trade, yep, I'm going to talk about it as soon as we get back. Dow's up 80, S&P's up 6.5. I'll be right back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
The E-mini right here, the 5-minute chart, see the confirmation trading between the 28.35s and the 28.30 area. Now it's at 28.34, and the 10-minute chart shows the same thing. Fascinating how these patterns just repeat over and over again. Well, let's go back to the question here. So yes, what I said was NSU trading at 3.68. I believe there should be a rally towards the 3.1. I said, think of it, this is just for the person that asked the question in the den. Think of it as just a trade first. If bought here, it needs 3.76 to start leg D. Take a little off and use a trading stop. It should slip back into the 3.60s, 3.50s within 7 to 8 sessions. So it should do some testing of the gap, at least the gap up low of just over 350 was at 53. This is a very nice chart formation. I mean, the monthly chart is improving. Weekly chart is looking good. 353 is really the key support. I think it could bounce a little bit and come back in. But keep an eye on this because it's building a nice flag formation in the weekly chart. Now, let's go to this. What I wanted to look at was, I had a question about, this is a kind of a tough one. Where did I put it? Oh, did I lose it? It was, I had it already. I thought I'd written it down. I think it was NTR was the stock. This one confused me because it's NSU. So NTR. Yes, NTR. It was, Jason asked. Okay. All is well. If you get a chance on the show tomorrow, can you look at NTR, the largest agricultural stock, Agrium and Potash merger? I have it in leg B monthly, and I'm scaling into leap calls. Okay, very good. Whopping move yesterday, just a gap up from the 54s into the 58 area. What was that? 58 round number high, 58.03. And today it pulled back just a little bit. It's a 57.21. Yes, I like it's a leg D in the weekly, and leg C, I have it in the monthly chart with a low back in the 41, 42 area, skyrocketing up to 56. And then coming all the way back down to 44, and now starting a leg C. I do like it. I do like it. And since you're skating and you're getting to leaps, I would suggest to you, yes, there should be a D. You think it's a B, but it's actually a C. Because remember, that isn't the leg A. That was just the first move as an IPO back in January of 2018. Then it drops sharply down to 40.41 in February. And this starts to move gray leg A, gray leg B, and this is blue leg C because it's above the all-time high of 1 month that was at 56.18. So this is new leg C, and I agree with you. I think looking out, there's something going on here that is very important. In fact, I think everyone should be putting down NTR. You don't have to jump into it right now, but keep it on your list because as a longer-term play in the agricultural sector, I think there's something here, and as the spectacular move of yesterday says that you've now got tremendous support in the 54 to the 53s, and that's 10, 12%. So you know exactly what your risk is, but the reward is that it pulls back, not much, but quite mildly, and then leg D goes and it goes to the 58s. So that then you pick up your whatever the risk reward is. It would be greater to the upside because that's kind of free ranging. So yes, I do like it. Next question I had was statement or question. Goldman Sachs. So Goldman Sachs is up today a little bit. It's up 1 at 23.05, 23.5.01. I don't like the chart pattern yet. I think it's a very nice move. If we had gotten into the 220 level or 22.25, I say, you know what, I'm just going to hold this. I find that right now, I'm looking at these financials, I'm not yet confident about the weekly charts. Look, XLF, 28.06 made a peak E, holding very well, holding the 14-period moving average. Weekly chart showing signs of trying to break that downtrend resistance line. Good action so far. MACD's just about across positive, and stochastic is looking okay at 55%. I believe I'm going to do a lot of work over the weekend to see whether or not we want to scale in to either the XLF or bank stocks or whatever it is, or in this case, Goldman Sachs. I'm looking at it longer term. I think it's going to be a big participant when the big move up starts sometime this year. Berkshire Hathaway, same thing, just stuck in range, acting very well in the short term, but the weekly chart is not that great yet. It is, the technicals are improving. Monthly chart is still good. Yes, it's time to look at it. And if you're looking out, it's really, I need to look at the risk because the reward could be very substantial if that whole financial sector kicks in. So good question. TRV is more the insurance side, travelers. This is, yeah, it's the same thing, acting well, but in the low range in the weekly chart. Daily looks kind of okay. Monthly chart doesn't look that good. So yeah, we just need to look at these. AIG came out with earnings. Gap's down huge, down $1.36 now. Closed yesterday in the 55s. Today's low was in the 51s. And now it's trading at 53.80. I'm going to be watching this. I don't like the weekly or the monthly chart. Not so good. All right, next question is the Boeing. Let's go through our usual. Boeing right now is down 2.24. Peak D in the daily. This is that cup formation, the second cup formation. I think is going to fail. That's what the monthly chart is suggesting, but nothing seriously dramatically wrong right now. I'm just looking at this and saying, I think it's seen its high, and that high was 3 months ago at 374. Remember, that was on the daily chart. We were looking at that, and in fact, got that signal, didn't do a trade on it. Open round number 372 on the 7th of June, high 374.48, plummets down to the 329 area, rallies up to the 364s just a week ago, and now it's down 347. I just think it's stuck. That's what I'm thinking. UTX, yep, that's what we own, UTX. Yeah, it's a little weak today, down 67, 133.52. This is almost like the Dow. It's suggesting a consolidation is taking place. At this point, we can only call it a consolidation because just like the Dow daily, the UTX, United Technologies chart, the MACD hasn't crossed negative. It looks like it's going to, but it hasn't yet. And the stochastic is at 78%. So this is saying the weekly chart is nice, it's good, but something has to happen here in the daily chart to really improve shorter term. So that's the way we're looking at it right now. I like it. I still think the weekly chart is telling me this is a good looking stock. Question I had about AMD. AMD, I haven't looked at it for a couple of days. Spectacular move up and down and all around. Makes a peak D in the daily chart at 20.18 on the 30th. Trading right now at 18. Weekly chart is in leg C. Let me just see if I can call it anything else. Yep, leg C, all-time high. I have to call it leg C. And the monthly chart is in F. Could be a brand new A. Just for security right now, I'm just saying, don't have to worry about it. It's holding very well. The advanced micro device is down 32 cents at 18.47. Got to watch closely because the estimate is just still short, trading at 107.34, down 8 cents. I'm going to watch this because there are some semiconductor stocks that are just not acting all that well, and a couple have bounced enough for this move right now. So we've got to watch it close. I'll be back in 2019.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I'm looking at the Wilshire question here. What about the Wilshire in wave 5 exhaustion in the NDX? So the same as the NDX. No, I'm looking at this and I'm saying, if I was looking at this just in purely as a curatorial exercise, in other words, I'm looking at it and I'm kind of curating the different time frames. I'm saying, okay, this has got to move here, this has got to move here. What I'm looking at is the Wilshire, even though it should be a peak D, it's probably going to be a peak D with no new high, all-time high, recovery high this week above 29,651. It's trading at 29,495 to make a D. It could be a very modest D with a little squeak to an E next week. Why? Because that peak C that was made in January, the same as the Dow and the S&P at 29,760, is just 200 and something points away. So it looks to me like it really, in this move, it looks a little more likely to go to a D. And that says, yeah, that weekly chart is going to probably extend a little higher next week. And you've got a rectangle formation right here, beautiful rectangle formation. And within it, you've got a leg D. And it's a peak E with a down arrow because the stochastic and MACD were very negative and the price did close twice below the 9-period moving average. Most importantly, does it make an arch formation, that deadly arch formation, the Chapman wave H pattern, or does it just start to rally now? So the big question is, when I say now, I mean in the month of August, does it make a lower low? And because the weekly and monthly are so strong, it really has great support in the 29,000s. And it doesn't even break very much below the 29,100 or whatever that was, low of last week, 29,089. That's the question. And it's very interesting because the technicals, the daily here is weak. The weekly is not as strong as it was on that big move up, but it's still moving very nicely. The stochastics are 92% and the MACD is good. So with that said, I have to look at it and say, the Wilshire 5,000 total market index fund is not breaking down. It's holding well, even though the technicals and the daily have weakened. And if you put this into context, I'm looking at the comp index, which is the much broader, and NASDAQ composite is much broader than the NDX 100, obviously, 20 times more. We've only got 100 stocks in one, and I think 2,000 in the other. That leg F in the monthly chart, F maybe / B, is good action so far. The MACD is good. Stochastic is okay at 84%. I prefer to have a little high, but it's still good. The weekly charts, technicals 90% in the stochastic, and it's a peak D so far, and a MACD is good. That says, you know what? This is kind of nice action. and we're looking at the daily chart, which made a peak F, and one of the most severe declines it's had, second worst so far. I think the worst one was the one that early in June, when it went from the 7,800 area down to the 7,400s. This one is a little bit milder, but still pretty sharp and quick. So are we looking at two pullbacks, sharp pullbacks, doing what one major one would do? I don't know, but that's something to ask the question that I'll be working on for my subscribers to my opening call over the weekend. What is going on in terms of the IWM, the Russell 2000, pulling back and failing now to participate very nicely in any of the up moves? Looking like it's making an H pattern in the weekly chart, testing the 9-period moving average as we speak at 165.74. 164.12 is the 14-period moving average, very important in the weekly chart. And this rotation through the different sectors, if you have one sector that acts very well while the others are weak, it uses up time in the consolidation instead of everything going down together. That's why I've emphasized that I am making a big deal of this rotational aspect, and I was expecting that if the Dow had any rally today, that it should start to fail because it was more a catch-up. Meantime, the Dow all of a sudden is the leading index, up 97 to right now at 25,423, right on that resistance line, and the S&P is only up 6.5, and the IWM is down $1.28. What a diverse market, and because there's a divergence, you usually want all your soldiers in lockstep, in line, or most of them. This kind of divergence says, yeah, choppy is going to be the name of the game, and that means that as one sector declines, the other one rallies, and as that rally starts to pull back, the others come back in. That's kind of what we're looking at. Next question I had was, no, not that. Oh, Exxon, good question. Exxon right now, you remember, I've had a tough time saying to subscribers, other times there have been really nice dividend stocks. You get capital gains, plus you can get the dividend, especially if you can hold it more than 3 months. Hold it for a whole year, it's fantastic. But how are you able to do this in an Exxon Mobil trading right now down 4 cents at 79.87, having been just a week ago, a little over a week ago, up at 84.40? And what I was saying at the time, if you're buying it in the 83, 84 area, I don't want to have, for subscribers, I don't want to have the risk of a 4 or something % dividend getting wiped out because the stock drops 7% or 8%. And look at this, going from 84.40 to 79.86. I would say that's a little bit more than the dividend. Yeah, you got to be careful. And I say the same thing about the communications area, the Verizons. Look, Verizon looks like it's okay right now. Spiked up to 53 the other day. 53.00 was the round number high on the 30th. Pulled back a little bit, holding the 9-period moving average and the 14. Weekly chart is improving, but look at the way it has these sharp declines. And even the communications, you would think, telephone, another one. Whoa, look at telephone. It goes from the 39 area just at the beginning of the year down to the 30. That's, 9 points. I would say that that's a pretty deep 15% pullback, something like that. We're looking at 9 points. Yeah. So what we're looking at is a situation where, no, it's more than that. Yeah, 30%. So what we're looking at is the dividend stocks even seem to be a little difficult to pick as 3-month durations without possibly losing capital. That's the issue there. Next question. Okay. Now, what I want to do independent of that is I want you to show you the IYR, the REITs index, a nice move up. It went from the 81 area, 82 area, down to the mid 79s, and now it's back at 81.99. Leg E just started in the weekly chart, straight by in a V-shaped pattern, very quick pop to the upside, and the monthly chart is improving. What I've been saying is I'm trying to look at this. I looked at it last week, and I was so close to saying maybe we should nibble on the IYR, and then I thought, well, wait a minute, it's pulled back so sharply, it would have to really make a big difference and go to the 81.50s. Well, lo and behold, here it is at 81.97. I like the action. So I'm going to be making some kind of decision over the coming few days. Are there any particular iShares, Dow Jones, US REITs Index Trust components that look very good? What is this? Is this a brand new leg A or is this an F in the daily chart? And that's going to be the big question, E/A. E says, oh, be a little careful. You don't really want to be buying here. A says, are you kidding? Any pullback you want to buy. So we've got to make a decision here when this sudden moves to the upside, break to a new high, a recovery high. We've got to wait a day or two to see how it unfolds. I'll be right back.
My dad, may he rest in peace, always had great advice, such as, if you want more, you have to become more. It's been a guiding light that has driven me to always be the best that I can be. When it came to trading and investing, I wanted more, and so I developed a set of disciplined tools that led me to become the #1 market timer for the S&P 500, according to Timer Digest. Dad went on to say, if you want more, you have to give more, which is why I took those same disciplined tools and created a black box that could look at any instrument for any time frame and tell subscribers and I whether it was bullish, bearish, where support or resistance was, and whether an instrument was forming a top or a bottom. The scans from my black box are now a part of the Mastering Probability service, which allows me to give more to subscribers. This coming Tuesday, August 7th, from 5 to 6 p.m., I'm holding an open house at TFNN.com, and I'd like to invite you to see the power of my black box. When it comes to trading and investing, I know I can help you become more too. Just go to the homepage of TFNN.com to sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. This is Steve. I think it's pre-recorded from this morning at 8 o'clock. And, of course, then you got Dave White. And I'm not sure who's filling in for Tom. So what we're looking at right now is that the IYR is holding well. Keep it in mind, IBB, we've taken good profits in the IBB. We've just kept a core small position, and I'm watching it. I think it's going to make an H pattern. This is kind of the pattern that I think once it starts to form, it forms in many of the indices, regardless of what sectors they're in. So this is what I'm really looking at. Trading at 118, hit a high of 120.06, above the 119.30 high of February the 2nd, week of the 2nd, and peak F in the Chapman wave, comes down to a trough B in the 100 area, runs up to A, B, C, D. We went long in the 110 area, and it hit 120, so now it's pulling back, digesting again. I think it's more digesting. I'm not sure that it's going to smash to the downside unless it takes out 113.50 support. So that's that. Now, just real quickly, the VIX index, just to go back again to the VIX index, the VIX index is coming off its low of 11.07. It's 11.70 right now. I'm watching this closely because what it's saying is that it is constantly under the 200 period exponential moving average. in the weekly chart, which is at 14.38. This time next week, if there's any chance of a pullback in the general market, the VIX should be trading at 14.80 to 15.30 as that's the benchmark for me. If it can close about 14.24 any day next week, that's the daily 200 period exponential moving average, that'll suggest weaknesses, further weaknesses coming. That's what I'm anticipating. But if the weekly chart a week from today, 4 o'clock a week from today, is up in the high 14s, it's suggesting be careful. We've got not the rotation that's going on. You've got more of sector weakness with the majority of those stocks that were the winners starting to digest gains. I don't want to go through the Amazons, et cetera, right now, other than to say those stocks that took a beating, I think are going to take a timeout. Doesn't mean they have to crash, but I think a timeout for the Amazons, the Googles, et cetera. We'll see. Have a great weekend. Check out my opening call, very comprehensive daily newsletter. Comes out every day starting Saturday through the following Saturday. Hey, have a wonderful weekend. See you Monday.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.